That's what, 14.2% of sales and 36% YOY growth.
Okay, that is, yes. So reason of this higher growth, there are two particular reasons. A, because we are also starting new lines in Rajpura and new plant in Bhiwadi, so we have to pre-hire some of the staff, and where as line doesn't become suddenly fully productive. So as we have made operational our Bhiwadi plant, and we also made our 2 lines operational in Rajpura. So that entire line manning has to be put in place, and this challenge will remain for a while we are investing in new plants and new lines. Second, we kind of also did our leadership hiring. The 2 specific senior leaders who joined us was on the project head and the HR head, but yes, there was some other leadership hiring done. So this in terms of these are the 2 prime reasons of increase. Third reason of increase is there's a reclassification of some bit of employee cost from other expenses to the employee cost. That was being reflected last year into the other expenses, and now it's being reflected in other. That itself is about 0.75%. So out of 14.2%, the 0.75% is on account of the reclassification of employee cost from other expenses to the employee cost.
What is the nature of that reclassification, sir? What kind of
Pardon?
expense? What is the nature of that expenditure which is reclassified, sir?
So those were some bit of employee expenses which were classified in the other expenses for last many quarters, and then on the advice of the auditor, they have been reclassified rightfully into the employee cost side.
Okay. So basically, this employee cost will remain elevated. That is what the gist is, right? Since we are
yes. So because if you look at other expenses, no. So
yeah.
Other expenses, I'll tell you, on an annualized basis, if you add other expenses and employee expenses, then for the both financial year it is 31.7%. So bit of a reclassification, and definitely employee expense has gone up for the reasons I told you too. But for the full year basis, our employee expense and other expenses, if you add both these two, they are both at 31.7% for year 23-24 and 22-23.
No, the reason why I was asking is because we've had a good quarter in terms of top line growth. We've had very good gross margins. I think it's at a multi-quarter high, and despite that, we could not see any benefit of leverage going through. So that's the reason why I wanted to understand this. But
yes, definitely in this particular quarter, I would agree that our employee plus other expenses, which last year was around 31%, they are 33%. So there is a 2% increase there. And the 2 reasons I told you is on account of employee expenses, and there's a bit of a higher marketing spend. As I was briefing in one of the previous questions, that competition on the biscuit side, the intensity of competition has really gone up from Q3 of the last year. There's by the biggest player in the market, all kind of consumer offers have been rolled out, and we had to match it to protect our shares in the market. And that's more of a temporary, may last for another 1 more quarter. But that's the bigger reason that we had to spend more on the marketing side in this particular quarter.
Okay. And gross margin primarily being higher because of higher contributions from exports and bakeries. Would that be the right understanding?
So one is a business mix. Yes, export has a much higher mix in this quarter. That's the one reason. Second reason is definitely, as I said, premiumization, right? That is definitely kind of made a difference to the higher realization, higher margin. And our commodity costs compared to the last year same quarter were better, which is our material and packing material cost. So these are the 3 reasons which have led to the better margins.
Okay. But will it sustain at this level? I mean, going into, let's say, the first, at least in the near term, going into first half, or do you expect it to kind of taper down a bit?
So, yes, it may remain around the same level, right, at this point of time. But yes, the higher contribution of export, we don't expect, to continue at the same pace. So there could be some moderation on account of that. But yes, our whole endeavor is to try and maintain our margins. If we have improved, we should try and maintain around the same level. There could be slight moderation on that in the first quarter or the coming quarters.
Got it. And then one on exports is just wanted to understand, let's say from FY23 to FY24, has the growth come more from adding new customers, or it's come more from increasing the value of sales to an existing customer?
So we have added more customers. We have added more countries. So both have happened. So, as you would have heard in our managing director's speech also, that in terms of expansion, both domestic and export, we continue to do that journey. So we've added more countries, and as well as we added more customers.
Got it.
And also one more thing, which is a specific, Suvir, would you like to take this?
Yeah, sure. So hi, this is Suvir here.
Hi.
Like Manuji was saying, that we've added a couple of customers as well. We've started opening newer territories. Recently, the last time you would have also heard that we've partnered up with Walmart to supply some of their private label, white label to them. And we're continuously growing our focus in North America and the Middle East and more developed economies, and trying to tie up with retailers to supply them with our brand, and also tie up with a couple of retailers to supply them their own brand. So the strategy is that keep acquiring new customers and also keep expanding our current customers by offering them our existing product portfolio, and also developing new innovative ideas to pitch to them.
Got it. And then one last question on cash flows, right? Until last quarter, if I remember correctly, our target capex for F24 and F25 put together was 500 crores. And I think this quarter, we've revised that to 550 crores, if I'm not wrong, right?
Yes, so these are large capexes, and where I said it will be over, the word I used in the last was that it will be over 500 crores. And so as we are getting closer to more realistic numbers on the capex, so yes, it should be around 550 to 570 crores kind of amount. That's what it looks like as of now.
Correct. So 215 crores, if I look at your cash flows, is something which we've spent in FY24. So balance basically 250 odd crores, or let's say the balance will be spent in FY25. So in terms of cash generation and payment of debt, will not be able to repay any part of debt this year. So is there a possibility of us that we might have to take some more additional debt to kind of fund our capex?
So the first thing is that let Arnav answer you this question. He's our CFO.
Hi. So basically, there will be a funding which will be there, and there is a moratorium period that you get as part of the investment. So it will never come to a situation where we are kind of taking funds to kind of a refinancing is something that is not there on the cards. If that's the question that you asked.
Basically, if you look at the current year's cash flow, probably our operating cash flows were not enough to meet our capex requirement, right? So, and hence that's the reason why we also see increase in debt, right? So my question was that similarly, compared to F24's 215 crores capex, our F25 number, if we were to compute 550 minus 215, it is basically on the higher side compared to FY24, right? So will our operating cash flows be enough to sustain that, or do we need to kind of incrementally take some more debt in FY25 as well?
So there will be more debt. So the whole idea is to keep it in the range of, one-third, two-third kind of a scenario, where two-third will come through borrowings and one-third will be coming from our own resources. And additionally, if you look at then this year, our working capital has also kind of gone up because of certain strategic calls that we have taken and Red Sea impact and stuff. So we expect a certain amount of relief coming in from that as well.
Okay. And by when do we expect to be debt free, or do we have a target in mind for net debt to EBITDA or something of that sort, which we want to be in?
0.34. Right. So, one is once the debts will come on board, it will be for a certain amount of time, for a few years. And if you look at from an overall perspective, our debt equity ratio is at 0.34. So it may kind of, go up certain decimal places, but it will not be kind of coming to an alarming level or anything of that sort.
Got it. That's reassuring. Thank you so much.
Yeah.
Thank you. The next question is from the line of Rajit Agarwal from Atharva Investment Managers. Please go ahead.
Good afternoon, sir, and congratulations for a good set of results. Would you be able to throw some light on Bake Best? I think in the third quarter we had committed close to 30 crores of investments for Bake Best. How much has already been invested, and what's the plan of investing the rest? And if you could just help us with certain business details of that venture.
Okay. So Bake Best is, our company which is kind of operating the West market for the bakery business. And this investment is part of the total outlay or the investment that the company is kind of planning, which we have been discussing about like 550 crores over the period of 24-25. So it's a subset of that. And so out of this 30 crore, 10 crore has been kind of invested at this point of time, and balance, as the time progresses and as the capex takes shape, there will be investments which will happen.
I'm sorry, I couldn't understand. So 20 crores will be invested in FY24-25.
Correct.
Right. And anything on the business side? How many outlets have been opened, or what's the plan of opening outlets in this quarter or next quarter? Something like that. I mean, just a little color on, how it is shaping up. Just to have, since 30 crores is not exactly a small amount, whether you will be able to share it now or maybe a quarter down the line.
Yeah.
I think this is something else. We're not understanding the question.
No, I just want to understand something on the business side, as in by when can we see the revenues?
Bake Best, listen, I'm a new Bector here.
Yes,
Bake Best is an investment which we are doing in putting up a state-of-art bun line and a bread line. Right, and that investments are happening right now, and the line will come up in the end of this quarter this year, 24-25. So, you will only see sales after that. You understand? So what probably you are seeing is a part investment of the total project cost.
Right, sir. So got it. No, I was under the impression that there will be bakeries set up under that venture.
Let me give a perspective on that. So in the West Bombay market, our bakery is already growing at a very good high double-digit percentage, right? We had started facing challenges in terms of capacity, and that's why we planned, and we see the Bombay and the West market to be a very high potential market, and we are confident that we will be able to kind of grow there, just like our NCR and North business, right? And so this growth engine will further get stronger once this plant comes up, as the Managing Director Anup has said, in the Q4 of this financial year, right? So we have today taken help of a contract manufacturer to strengthen our supply chain to feed in markets. But our work in terms of expanding distribution, adding more outlets, and adding more feet on street in terms of expanding business, that continues, right? So that's not on a kind of hold. But yes, with the state-of-the-art facility coming, we will be more stronger on our supply chain, and we'll be able to offer the best product, quality product, the state of the plant to the market, and expand the market much faster and cover the entire Bombay probably in the coming year, which will be the year 25-26 financial year.
Sure, sir. Thanks. Thanks a lot.
Thank you. The next question is from the line of Amit Purohit from Elara. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, on the working capital, you indicated one was the debtor days which had gone up. And second, basically, is towards some advance payment, right? You indicated for buying sugar. Is that what?
Yes.
Yeah. Okay. So that would so because the other current assets have gone up significantly. So how do we think about this? I mean, this is a kind of one time which gets reversed, or this there is a change in the way we are doing business.
So obviously, you see, we were at as far as sugar stocking is concerned, it will obviously come down because we'll keep consuming it. But the Red Sea impact is something which can take another 1 or 2 quarters to come down, because this is a force majeure kind of situation, and for us or for anybody. So hopefully it should also kind of come down over the next 2 quarters.
Okay. And sir, the facility, the acquisition that you have done for the bakery and the bread, for that, and last call you indicated that you are looking to now expand the bread business in the Punjab and strong markets where already Cremica is there. So is that the thought process that the Cremica brand would be more in these markets of North, whereas English Oven could be in rest of the India? Is that, or that's not you need to think?
As Anup briefed earlier also, that Cremica in Punjab is a very, very strong brand, and we have very high market share on Cremica biscuits. We have a very high distribution of Cremica biscuits in the Punjab and the upper side of the north. With this acquisition, we also will have Cremica brand available for the bakery side. And so that's, once this acquisition gets completed, that's a go-forward business strategy and the brand strategy we would finalize. And definitely, that will further strengthen our foray into the upper north on the bakery side.
Sure. Thank you so much. Thanks.
Thank you. The next question is from the line of Mahindra Munda from Simba Investments. Please go ahead.
Hello, are you able to hear me?
Yes, sir, but could you speak a bit louder there?
Okay. Thanks for the opportunity. Actually, I just want to know, you mentioned there is a dedicated subsidiary in UAE in the slide number 21. So can you just throw more light on that, more details on that? Hello?
Okay, this is regarding our subsidiary which is out of Dubai, and this was to focus on the GCC region, and I would request Suvir, who's heading the international and export business, can brief you about the entire GCC region opportunity and strategy with which we are going forward.
Yeah. Hi. So basically, the Dubai subsidiary has, we are going to start dispatching our containers and billing it through the Dubai route from the coming quarter. And this time the subsidiary will be fully active. The purpose of this subsidiary is that we want to start routing the containers into different countries through the subsidiary, and also start billing locally to fuel our expansion into the Middle East. The Middle East for us is going to be for the export department, our next foray into a trying to build a distribution network with our importers on the ground. We have 2 people located out of Dubai itself and 1 person out of Ghana. So their visa allocation has been done from the subsidiary, and they are the people who are going to be helping us build our Cremica brand into the market and start supplying our products locally and build a very good presence over there. Also, in addition to this, what I would like to say is that those are the current individuals who are, working to find importers in different countries altogether, supply our products in the market, and also what we're trying to do is that we're working alongside our importers to build a branding presence by leveraging our brand ambassador, Mr. Karina. So we are utilizing the same strategy what we're employing in India as well as in the Middle East. So the purpose of the Dubai office, the subsidiary is for that purpose.
Okay, I appreciate that. One more thing, have you entered any agreement with Lulu supermarket in Middle East? Because recently I saw Cremica brand with Lulu cover on that. So it was not a Cremica cover, it was Lulu cover, which we mentioned manufactured by Bectors Foods. So that's what I don't notice.
So we have been partners to Lulu in the Middle East for quite some time now. It has been a couple of years since we've been associated with them. So we are manufacturing not just a single product, but a couple of their SKUs. We are manufacturing them from India and supplying to them in all the 6 GCC countries and also to their stores locally in India. And what we are also planning to do is, from this year, we are already present in Lulu in India with our Cremica brand. Also, this year we will start being present in Dubai, Lulu with our own brand, and that should be happening from Q3 or Q4. The negotiations are currently ongoing, and we will be bearing the listing cost and investing in the market.
Okay, appreciate that. And one more feedback is our comparison of Good Day cookies are really very good and value-wise also and weight-wise also. So that's what I want to mention, give a feedback on that.
Thank you so much. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Abhishek Kumar from Sanctum Wealth. Please go ahead.
Hi, Rob. Good afternoon. Good evening. Congratulations on a good set of numbers. Just wanted to touch upon, just wanted to know your view on the bakery segment, especially the QSR bit. So how exactly the demand trends over there are, as we have seen over the past year now, that demand has been somewhat subdued. So what is the picture you guys are getting to here from then?
So, Ishan this side. Yes, there is a demand pressure, on the QSR thing, definitely. But, as you have seen, we are continuing to build capacity because, this is a very solid business model. We feel it's a very short-term thing. We do have visibility into new stores opening, which is definitely going to drive growth. There are newer enterprises which are also entering the market, so which are also potential customers for us. If you have seen, we have posted mid to high teens growth even in the bakery segments, also including the institutional, the QSR business. And I would say that is a reflection towards, our plan and our strategy to grow this business. As we are adding more customers, we are adding newer products. And, I've always been saying the opportunity for us is not only on burger buns. right? The opportunity for us is definitely on burger buns, but also expanding into the frozen side where we are getting into the desserts. It is also on other value-added products. So, without naming a customer, even we have started now working on a very major project with a very large QSR chain for new products which are non-core to burger buns. So definitely value addition will keep happening in terms of other products, new customers, but also we remain very bullish on the buns market, where we will add capacities as India still has a very long runway in terms of number of stores, growth.
Okay, got it. Thanks for that. And just the last bit on this QSR thing. So just want to understand. So you guys are exclusive partners for, say, ABC, say a McDonald's or Burger King or any other QSR. So you guys become exclusive partners for supplying buns across the region, or is it you guys also face competition from, say, unorganized players or maybe some other?
No, see, it's not an exclusive. There's no exclusivity here. Yes, we do hold a large share of business for most of our partners. For some of them it's exclusive. For some of them it's a large share. I think it's more about the value that we are giving to our customers. So there is no exclusivity here. It is a very competitive and dynamic business environment. But we do hold a very strong market share, and we are further strengthening it by adding new products.
And the contracts or agreements are with the main franchisee, the parent, or the franchisee operators? Or
no, there are no agreements.
Okay. Got it. Thanks.
Thank you. In the interest of time, this would be our last question, and I now hand the conference over to Mr. Anup Bector for closing remarks.
Thank you everyone for joining us. I hope we have been able to answer all your queries. In case you require any further details, you will please contact us or Orient Capital, our investor relation partner. Thank you. Thank you so much.
Thank you. On behalf of Mrs Bectors Food Specialities Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.